All right, welcome back, everybody. Good to be here. Good to be back. Just taking a quick peek at the non-farm numbers. You can see they put a big note right here, right in the middle of the data, right? Hurricane Irma hit Florida September 10, and Harvey made landfall August 25th. And the net effect was to reduce the estimate. So we don't know by how much. It says there's no effect on the unemployment rate, but we know the unemployment rate isn't that important. It's the number of jobs that really gets people excited. And so no changes were made to the estimate procedures for the September figures. So I think it's safe to say that, right, like whatever was missing from this month will be appearing in next month's table. So let's take a peek at this month's table. You can see the negative 33 is the figure that everybody got excited, right? Total non-farm. After 138 and 169, you got negative 33, which is, definitely an anomaly. Excuse me for 1 second. Okay, we're back. So it's an anomaly. So we really don't know where that anomaly falls in here. But, as we take a look, we can see, well, you look at manufacturing, the previous month was 41,000. That looks like an anomaly. I mean, every month is usually negative, and the prior month was positive. So the -1 doesn't look like an anomaly there. This sure does. Somewhere in here, something is missing, right? Excuse me. Private service providing. I mean, somewhere in here, in this group, there's a big hole, right? So tracking it down, okay, again, it's somewhere in business and professional services. At least the number wasn't skewed by temporary help. We know that. Education, there you go. Education and health services was very light. And healthcare and social assistance was very light. And here it is, folks. Ready? Look at this. Leisure and hospitality, negative 111. We've been saying for a long time, this whole economy has been based on hiring folks in leisure and hospitality, and to a fault, right? You can't have an entire economy based on bartenders and waitresses. And, did we lay off 111 in that 1,000 in that sector? No. This is where the error is. You've got to believe. So normally that sector is up around 30,000. So if this was a normal month, that would be plus 30. So plus 140 on that sector alone from this number. In other words, this figure is negative 111, but it's usually plus 30. This number is about 140,000 off from its normal figure, and that's just one sector. So just on that sector alone, I think you're looking at 110. Just based on that sector, you're looking at 110. Okay. And that's if no other sectors lost jobs, and we know that's not possible. So minimum, next month, they're going to revise this month up to 110. What do you think of that? Just from looking at this. Okay. Now, what about the other stuff in here? There's some stuff in here that might not be skewed. Average weekly hours among those surveyed stayed flat, but earnings did seem to increase 12 cents an hour. That seems to be in line with the previous month. So earnings continue to increase at the same rate, right? Carlos makes a really good point. One would think that recovery from hurricanes would be good for certain job sectors. Yeah, I would say construction, right? Construction only had 8,000 jobs, and you've got to believe that Texas and Florida and Puerto Rico are all warm, so they could all build during the winter months, which are coming up. So you could see some pretty fat numbers coming up in the coming months, and you'll see it manifest in construction, I would imagine. Might not happen right away. Take a little bit of time to get permits, right? But I think it's going to happen. Okay, so overall, I think we found the hole. It's right there. It's in leisure and hospitality. That segment clearly was incorrect, and I think you're going to see a minimum 110 next month on the revision. Okay, let's get back to business then. Yeah, and I wonder, does that mean we should maybe be looking at, I don't know, some drywall companies, right? Perhaps. Or some, see, what's been doing really well is GM. This here's an auto company that's done really well, General Motors. And Ford. Ever since these hurricanes hit, these auto companies have taken off. Sherwin-Williams. Look at that. Boom. Going higher. Right, Sherwin-Williams. So, yeah, it's happening. How about a little Caterpillar? All-time high. Right. All right, let's get back to Forex, gang. We looked at Aussie earlier, and we said Aussie was coming down that 10-day moving average. One thing we haven't talked about too is gold. Gold is coming right down with it. And gold broke that support. I know we were looking at this support level, and did you see the bounce we got out of it? We got a bounce out of it, but it couldn't sustain. And we broke down. And that's your breakdown in Aussie in a nutshell, is this breakdown in gold. And it's also right? Also here, although there's a breakdown in copper, although copper's fighting back. Gold isn't really fighting back as well as copper is. Copper seems to have some fight. And whenever you look at copper, it's impossible not to think of China, which is by far the world's biggest consumer. Right. Maybe copper can save Aussie, I don't know. But gold right now is pulling it down. Gold seems to be in charge. Canada is also having trouble along with Aussie. You're there. Right along with it. Let's put that 10-day moving average back on there. Look at that. Well, we've got one beautiful bounce off of the 10-day right here. And we've spent 1, 2, 3, actually starting here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days on one side of the moving average. That's something I also look at is, if the candles can stay on one side of that moving average, that's definitely a sign of strength. And we're definitely seeing that here. So I would consider, if you're not in, you don't want to turn this into one big buy the dollar trade. But at the same time, if you're not already in a long dollar position, dollar Canada long position might work. And it's a good way to avoid that whole euro pound situation. What with possibility of hard Brexit being a possibility, and just so much volatility as the negotiations go back and forth between Europe and Great Britain. So how would this be played? Entry is 124.80. 124.80 for dollar Canada. That is the entry point, 124.80. As of right now, that's as of today. Today is October 9. And one thing you have to be cognizant of is this, that if the price comes down, it will push the moving average down. So the entry could end up becoming a little bit lower than 124.80. It could be 124.75. It could be somewhere between 124.75 and 124.80. So we have to be aware of these things. Okay. So we know our entry. What about our stop? Our stop would be half of the ATR. Now, you can see volatility is dropping in dollar Canada. We were moving 125 pips per day less than a month ago. But now the volatility is declining. We're still moving 90 pips per day. So 90 pips per day, half of that is 45. So half of 90 is 45. The current moving average is 124.80. We would subtract 45. 80 minus 45 is 35. So the entry is 124.80. The stop is 124.35. Now, what if we ended up entering a little bit lower? In other words, what if the price pushes down and we enter at 124.75? Then the stop is 45 pips below 124.75, which is 124.30. Okay. The stop is still 45 pips below the moving average, and the entry is still on the moving average. The 124.80 entry is only good for today. At 5 o'clock Eastern Time today, this daily candle will close and a new daily candle will open. When the new daily candle opens, the moving average will move because the 10th candle, right, this is a 10-day exponential moving average. It consists of 10 candles, including today. One candle will drop off. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This little red guy here at 5 p.m. today drops out of the equation, and a new candle begins and becomes part of the equation. Because of that, the moving average will climb higher, somewhere in the vicinity of 125 even. That will change the entry point. Okay, that will change the entry point completely. All right, and there's your setup. There's your dollar Canada setup. It's interesting. The dollar has fallen so much, it probably became a little bit oversold. Let's go back to the US dollar index chart. This is a chart of the dollar against a basket of currencies, as I'm sure most of you are aware. And just looking at the RSI, you can see that it became oversold on several occasions. On the daily chart, it became oversold. And one of the oversolds actually catches the bottom, catches that hammer right here, which ends up becoming the ultimate bottom of the entire pattern. Excuse me for one moment. And we're back. Okay. All right. So maybe this is the start of something. We've really come off on the dollar. We went a little bit underneath support, to be fair. So buying it right at support would have been buying it a little bit early. But the trend is acting as if it's turned, and maybe it's time to place some trades where we're buying the dollar here. And our trade buying the dollar against the euro certainly worked out pretty good. Now it's time to maybe set up some more trades where we buy the dollar, trying to latch our wagon onto this dollar strength trend, see if it lasts. You know, the trend is your friend, as they say, right? And it's old advice, it's old school thinking, but sometimes old school thinking works well. And so why fight it, right? Why fight it if it's working? And trend trading has been working this year. Let's take a look elsewhere. See what else is working. One thing we have not looked at the yen as of yet. The yen kind of goes its own way. This thing has been bouncing off of the 10 once. That might have hit the stop. Twice, 3, 4, but look at the way it's flattening out as it approaches resistance. This is a mini trend within a larger range bound support and resistance. I do not trust it at all. Right? Because it is trending, but it's trending. I always trust what's happening on the bigger picture a little bit more, I guess. And really, you look what's happening. Yeah, it's been trending for 1 month, but it's been sideways for 6 months. Do you see what I mean here? Actually, longer than 6 months. Down, up, down, up, down, up. This has been hard to get a handle because very often the yen is influenced by stocks, but stocks are really kind of running, and stocks are trending well. The yen is not. The yen appears range-bound against the dollar. So it's a little bit of a conundrum for dollar yen. So not a big fan of this. I'd be short up here, a little above 114. Looks kind of an interesting place to sell. What about euro yen? This is a bit more trendy, but look at how it just keeps stuttering. This reminds me of a car that needs a tune-up. The way it just travels in fits and starts, and it backfires, and it seems like it's running okay and it stalls. It must be very frustrating to trade this if you're a trend trader. So not a huge fan of the euro yen or the dollar yen at this point. Pound yen making a big leap earlier today after a move down. Not really adhering to this 10-day at all, but we're seeing this thing has been spilling over a little bit lately, so leaning downward a little bit. Pound's starting to slide a little bit against a lot of currencies after a huge run in September. It's a huge September run leading into some October weakness. Canada. Not sure what to make of that. So much resistance dead ahead, and it smacked into it. Recently. It's just under resistance, and it's trending up, but it's just under resistance. So if you short it, you're shorting it into an uptrend, and if you buy it, you're buying it right in front of resistance. It's kind of a no-win situation on Canada yen, if you asked me. How about Swiss yen? Could be forming a head and shoulders. The left and the head are there. the right shoulder appeared almost ready, and then we had this sort of second larger right shoulder forming, sort of like an Igor right shoulder, I like to call it, where you have like a mutated large right shoulder and end up looking like a character in a Frankenstein movie with a large right shoulder. Anyway, that's neither here nor there. That could be toppish, but it's not a huge run into it, and it's a small run into it, so I wouldn't have big expectations on a pullback. So the yen pair is really not very inspiring, whereas the opportunity seems to be in the dollar pairs, not the yen pairs. And I'm avoiding euro and pound, waiting for things to settle down a little bit. Let's wait for those folks to settle their differences. And let's see if they can iron out their differences and come to some kind of an agreement, right? Which is very, very difficult, obviously. It's like going through a divorce, right? I've never gone through a divorce, but it must be terrible. It's a negotiation, isn't it? Right? And that's sort of what is going on with Britain and with and Europe, and now we're seeing big protests in Spain, right? And our friends at FX Street are directly affected, right? Because it's happening right in the area, right, where FX Street is located. And one thing you'll notice is that really helped us. Our trade, we were short euro, but you'll notice the euro had such a great month, really a great summer. June, July, August, September had a good month, but October has not been good. Late September into October has not been that good for the euro. And you have to wonder if, it's a funny thing, because I think maybe the whole issue of independence for Catalonia, right? And I'm not sure if I'm pronouncing that correctly, but the whole issue of independence, Spain declared that vote invalid, right? And they could have just said, okay, you can go ahead and vote, but it's invalid. But instead, they sent the police in and started beating people up. And what that does, it draws a lot of attention. And all these videos go viral. And now everybody's watching. Everybody's watching. And what they've done is they've drawn a lot of attention to the fact that part of Spain wants to be free. They've actually drawn a lot of sympathy for Catalonia, right, and for Catalonian independence. And I think that's kind of interesting how being a bully can work against you, right? Because now I think a lot of people who weren't even aware that of Catalonian independence are now supporting it. Isn't that interesting? Okay, so there's a lesson in there somewhere, right? Don't be a bully. Okay. Carlos says, I like Euro USD at 115.50. If it falls, I'm looking to be buy at 114.20s, hold it to next year. What's your take? Well, long-term target 122.85. Well, here's the thing. It's already down. It's already been beaten up a bit, and now there's a lot of support here from August. You see all these wicks. So I like it, but I'm a little bit shy for two reasons. I'm shy because the issues with Brexit are going to create volatility, and it's going to be very unpredictable. And now I think the issues in Spain have also created a wild card. So I just want to give it a little more time to create a little more certainty. I think, certainly it could be a buy because of this support. I drew this line in just this morning. I see a lot of support, I see a lot of wicks, and I do see a hammer here. So there is potential. If I were a buyer, I don't know if I'd be a buyer at 115.50 because the support is up here. But I am concerned that there's more downside because there is going to be speech from May, and there's ongoing demonstrations in Spain. And I think maybe this needs a little time to shake out and give me a more obvious trade. Like I think I don't want to touch this yet. I'm going to give it at least 24 hours until it can jump out at me and say, scream at me, hey, you should be buying this, because I don't see anything obvious jumping out at me yet. Okay? All right. And on that note, I'm going to call it a day, but thank you so much for listening. This is Ed Ponsi saying thanks again, and I will be back tomorrow. Hopefully I'll be over this cold. And until then, everybody have a great day. I'll see you tomorrow.